Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you. On this channel, we cover dividend growth investing, portfolio updates like this one here today. We did add $1,398 in new capital to the portfolio. We also do a stock pick of the day series where we look at a stock that's pulled back on the day or one that we think might be showing value. We do, which will be coming up as we roll out of July, or have rolled out of July, or out of June into July. A new month has started. So another one of the videos we put out every month is the monthly stocks to buy, maybe, watch, question mark. And we also do the dividends paid out for the previous month. So probably Monday and Tuesday, I will be pushing out those videos. And happy 4th of July weekend, excuse me, for all of you out there. Hopefully you're having a great 4th of July weekend, and thank you so much for tuning in. Let's jump right in, not waste any of your time today. Again, we did add $1,398 to the portfolio. Let's see what we did there. Well, we had one options close for the week. No new options, but the put that we did on Williams-Sonoma last week, $117 strike price. It really ran up past that. I think it's like $124 per share now. But we kept the $124.45 in premium, and we will probably turn around and do another put either on this one, or there are a couple others that I might look at maybe switching this out a little bit. CVS is starting to look very attractive, as is NTR and Pfizer. All of those are looking very attractive. So I might look at a couple put options on different plays here, as Williams and Sonoma seems to be running into the dividend. And I don't want to overpay for this one here, so I'm not comfortable. Anything above 117 is about as high as I would go on this one. So that one closed out. Let's continue on. We get into, on June 30th, the first dividends paid out for the week, and we received $172.58 in dividends total. And Bank of America, ticker BAC, out of the financial sector, paid us $81.48. We have the drip set, so that $81.48 went right back into the portfolio and bought 2.83721 more shares of Bank of America. Union Pacific paid out on the 30th as well. They paid out $44.54. Same thing, went right back in and picked up 0.21819 shares of Union Pacific, and ticker UNP is out of the industrial sector. And Kraft Heinz paid out on the 30th as well, $46.56. Ticker KHC, out of the consumer staple sector, and the $46.56 went right back in and picked up 1.31753 shares. All total, these new shares here added another additional $5.57 in passive income over the next year. And again, $172.58 total for the week in dividends. And we did all of our buying on June 30th as well. Last day of the month. Why not get it all in while we can? The last day of the month. So we took advantage there on the 30th, and we added $1,398.35 as well. And with those funds, we picked up one more share of AT&T, ticker T, out of the communications sector. And that one share cost us $15.87. We picked up one share of Kraft Heinz Company, ticker KHC. They paid us some dividends, so we showed them a little love and picked up one more share there. And out of the consumer staple sector there, AT&T is out of the communication sector, if I didn't mention that. And we picked up that one share of Kraft Heinz at $35.37. Then we added a new position, or actually we re-added. We actually bought this maybe 2 years ago at $70, $80 per share. It ran up to about $100 per share. We sold it, I think, around $98 to $102, somewhere in there. And then it's dropped way back to $69. So we picked up 10 shares of CVS Health Corporation, ticker CVS, at $69.38 per share. So this one is really looking attractive now. This is one, like I said, I may look at maybe not doing the put on Williams and Sonoma and do it on CVS instead and pick up 100 shares here, while this one is really down in the doghouse. NTR Nutrien, I added 11 more shares here. This is one that I added last week, so this one's another one I'm trying to build out this position. These two in particular here, 10, 20 shares each. So I want to build these out while they are showing value. And we picked up those 11 shares of Nutrien, ticker NTR, out of the material sector at $59.39 per share. And all total, these new positions, this $1,398.35 added an additional $50.04 in passive income over the next next year. And this is wrong. The total invested was 1,398. I did not change that. Apologies there. This is usually for whenever I have more than one slide invest on multiple days. This week I did not. It was all invested on the 30th. And all total, the passive income with the new capital added, plus the dividends paid out, the shares that those funds picked up, we added $55.61 in additional passive income. This is that snowball in effect. As you saw on the previous page, those dividends paid out plus the new capital grows that snowball even faster. So instead of just $54 or $50 because of the new capital, we get those dividends reinvested as well. And that's why these numbers, this is a little higher. So that is the snowball effect. That's what it's all about. Quick run through the sector allocations. Communications makes up 8.77% of the portfolio. Consumer discretionary sitting at 8.65. Consumer staples 5.88. Energy is sitting at 7.13% of the pie. Financials makes up 11.42%. Healthcare is the second largest piece of the pie here, sitting at 14.24. Industrial sitting at 8.69. Technology sitting at 9.16. Materials 11.68. And the no utilities still. I am watching NextEra Energy, really UGI as well, but I'm a little concerned with their overall. Some of their numbers look a little stretched in my opinion, so that's one that I'm still watching. If they straighten things out, possibly, but if they rebound as well, then maybe not. But no utilities still. REITs and real estate still the largest piece of the pie, 14.39% of the pie, and no ETFs. I really consider this it's ETF, but I am not against ETFs. I have ETFs for my daughters and their custodial accounts. If you need a really hands-off, passive way to do investing, don't have time to do the research on stocks, index funds or ETFs is the way to go. Just set it, forget it, keep adding into it, dollar cost average whenever you have additional funds, right? That's the idea. Just be investing. That's really what it's all about. I mean, you don't have to be an individual stock picker. Whatever works the best for you. If ETFs and index funds are your bag, more power to you. If dividend growth stocks are your bag and you don't like, or I'm sorry, if growth stocks are your bag and you don't like dividends, hey, more power to you. There's more than one way to invest. Just be putting money into the market. That's all I'll say. Sector weights, this is just a different way to look at it. You know, you can see the percentages like we did over here, or you can look at the dollar amounts here on the right-hand side. You can pause this and go through that at your leisure. And here it is, my portfolio. I show you this to you every Sunday morning so you can see gradually over time how a portfolio is built out, you know, in week to week, real time, whether I'm up, whether I'm down. If I'm in the red, I'm going to show you that. If I'm in the green, I'm going to show you that, right? All the positions in my portfolio, how many shares, current price as of the close of business on Friday, current market value, again, as of the close of business on Friday, my average share price, my purchase price, which is just the average share times the total shares currently, and total return, whether I'm up or down. You'll see it here. Let's take a look at real quick through total return. What are my worst performers? Bank of America is one of the worst, down 1,800 there. SBSW down 1,500 there. Verizon down 1,400. Now let's look at some of the best in there. OC, this is Owens Corning, up 1,700 there. OHI, Omega Healthcare Investors, up 649 there. 443 Williamson Sonoma there. Again, this one may look a lot, I will take a minute here. Williamson Sonoma, this one may look a lot different because I've been counting these 100 shares because I've got the put or covered call. Whenever I'm assigned, I would do a covered call of these Williams and Sonoma shares. So I've been showing 102 shares, but if I roll out of these and let's say do Pfizer put, then I will take off this 100 shares and I will show the 100 shares under Pfizer. That's how I will do that moving forward. But let's continue on. Percent return, whether I'm up or down percentage-wise, which sector they fall in, whether they're a quarterly, monthly, semi-annual payer, and what they pay out. Their current yield as of the close of business on Friday. My yield on cost, how much of the portfolio is weighted to those individual sectors. On the previous slide, we saw the sector weights. This is by individual position. The estimated annual income from each position, which month they pay out, their year-over-year dividend growth, and where they stand 15% of their 52-week low. For example, and the reason I do this, for example, I just picked up, where is it? CVS, right? And I want to pick this up while it's under 15% of its 52-week low. Well, 15% of its 52-week low is $76.29. I'm currently buying it in the $69.38. That's my average cost. So in the $69 range. It's a little bit lower than that even whenever I bought it on Friday. So it must have dropped a little bit before the close of business, which is fine because I'd like to continue to add to this and dollar cost average into it and get it to over 100 shares. Same thing with NTR. right? It's 15, it's right up against 15% of its 52-week low, $60.06. So if it goes over that $60.06, I will probably back off. So I'm hoping that it pulls back or at least stays in this $59 range. So that is the idea behind the 15% or 52% of the 52-week low. Because that's whenever I don't want to go any higher than that when I initiate a position. Otherwise, I want to, when I see red, these are the areas I'd buy, right? Bank of America, I could add there. SBSW, I'll continue to add there, even though I'm down a lot, 33%. That's a big one, right? Just like catching a falling knife. But I just keep on dollar cost averaging. Verizon, I'm down quite a bit there, right? My average cost price is $43.27. It's $37.19. But these are all going to come back. I'm not that concerned about them. So that is where that sits. Total shares currently 4,128.388. Market value is $147,615.24. My purchase price is $149,194.50. I am down $1,579.34 or 1.06%. Current yield 4.881. My yield on cost 4.830. And really, this is what it's all about. This is what I focus on. The dividends paid out from the portfolio, from all the positions within the portfolio, the passive annual dividend income, $7,205.74. And this continues to grow week over week, month over month, year over year, whether the market's up, down, or floating sideways, as long as I continue to add new capital to it, as the positions within the portfolio increase in price, as they pay out more dividends, right, and buy more shares of themselves, that snowball will continue to grow, and eventually I will be able to use this to live off of and pay all of my bills. And that is the idea behind dividend growth investing. Well, that is it for this one. Always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join the vested interest community. We are building a dividend growth community with like-minded dividend growth investors to share stocks that we're investing in, stocks that we're avoiding, stocks in our portfolio, ones that have done well, ones that have done bad, mistakes we've made. I've made some mistakes in the past, chasing yield, for example. Don't make the same mistakes that we are making or have made in the past. That's one of the things you can learn from other people's mistakes. You don't have to make those mistakes yourself. And that is the idea behind this channel. Dividend growth investors helping dividend growth investors. And with that said, I hope you have a wonderful 4th of July. Really appreciate you stopping by. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. Canada's money should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.